Good afternoon and welcome everyone. My name is Colleen Bass and I'm the Director of Alumni Engagement West Coast for the University of Maryland Alumni Association. We are excited that you're able to join us for today's webinar, Navigating the Home Buying Process, presented by David Stroh. This webinar is part of the Alumni Association's Professional Development Webinar Series, in which we hope to provide thought-provoking and valuable content that will help alumni like you achieve your personal and professional goals. We have a lot of information to cover today, but we will take questions at the end of the webinar. Feel free to submit any questions you have throughout the presentation using the question box located in the GoToWebinar control panel. David Stroh graduated from the University of Maryland in 2014 and spent time in marketing and banking before entering into a career in real estate. In his first year in the industry, David sold 2 times the national average of homes for a real estate agent and has averaged 3 times that number since. He is passionate about education, both for himself and his clients, and recently achieved the designation of GRI, which is held by less than 7% of realtors nationwide. And now we will get started. David, take it away.
Thanks so much, Colleen. Really excited to have an opportunity to talk about something that I'm really passionate about, is helping people buy their first home. So yeah, I'm going to take a little bit of time here and give you some tips that I think everybody should know that we probably don't, or clear up some myths maybe that people have about the home buying process. So let's get started. A little bit about me. That's me there in the corner. I promise if you meet me in person, I'm a lot taller than that. But I work for RE/MAX. We are known as the biggest real estate company in the world, basically. We're in over 100 countries, obviously every state in the US. Worked for them for my entire career, and I don't see any reason to go anywhere else. As you mentioned, I am a realtor. There is a difference between a realtor and a real estate agent, and we're going to talk about that a little bit later on. So I'll save that for then. Also, as you mentioned, Colleen, I am a graduate of the Realtor Institute. It's a designation that I am really, really proud of. And again, we'll talk a little bit more of that later. I'm also part of the Equal Housing Opportunity, which means that I feel that everybody should be able to buy a home, period. That's goes without saying for me. I'm also a writer for Inman News. A lot of people outside of the industry of real estate have never heard of Inman News before. And basically, the best way to think about them is if you wake up in the morning and you go on your CNN, Fox News, MSN, whatever your preferred news organization is, real estate agents go to Inman. That's where we can learn about everything going on in the industry. I've been writing for them for about 2 years now, and it's been a really cool process to help me learn and to help educate others along my industry lines that way. Last but not least on this page, in 2017, I had the honor of being named a most recommended real estate agent by Nextdoor, the app where you can talk to your friends and in your community. That was a huge honor for me, especially because it was in my hometown of Woodbine, Maryland at the time. So that was a pretty cool honor that I received that year. But most importantly about me, I'm a Terp. Picture on the left, me and my wife at Maryland Stadium for a football game. She was just my girlfriend at the time. And then on the right, it's a picture of us for a basketball game, obviously at the Xfinity Center. My wife Rachel never went to Maryland as a student, but please don't hold that against her. And in the middle, one of my favorite pictures of all time, it's obviously a screen grab from YouTube of the Maryland Duke game. One of my last games as a student that I got to go to, first ever flash mob for the Maryland student section. We beat Duke, which is amazing. And in that little white circle, you can see me hanging out with Testudo and thousands of happy Terp fans. Like I said earlier, RE/MAX is in over 100 countries. We have a huge network of agents across the world. We get to learn from each other. We get to collaborate with each other. And while I'm based in Maryland, I'm licensed as a real estate agent in Maryland and Virginia. I can help people all over the country, all over the world, connect with people that will help them find a house. So if you're looking for a home in California, you're looking for a home in London, you're looking for a home in Tokyo, wherever you're looking for a home, I can help you connect with somebody there who's going to take the best care of you and has the same qualifications, the same focus on education that I do. So even if you don't live in my area, I'd love to help you out, and I'd love to be able to, make a connection with either a friend of mine or make a new connection that can help you along the way. So don't worry about the fact that I just live here in Maryland, because I'm sure a lot of you out there listening do not, which is awesome that I get to talk to so many people at one time. So just how to reach me real quick: phone number, email, Instagram, Facebook. Like I said, with education is so important to me, for my clients, and for everybody out there who's thinking about buying a home. So I put a lot of info on Instagram, a lot of info on Facebook. If you follow me, like my page, whatever. If you have any specific questions after this Q&A, I know a lot of times we'll think of the perfect question 3 days later, and we don't always have an opportunity to ask that question after the fact. So even if you don't get an opportunity to ask the question today in the Q&A, send me an email, send me a text, give me a call, whatever. I'd be happy to help you out, happy to answer whatever questions I can. I also have a newsletter that goes out every Friday that has a lot of market info. A lot of the graphics you're going to see in this presentation I've actually pulled from past newsletters and past posts I put on Instagram and Facebook. So to get more of those types of things, let me know if you want to be on my newsletter list. I'd be happy to add you. Real quick, here's a disclaimer for you. I'm not a mortgage expert. I'm not an insurance expert. I'm not a tax expert, and I'm not a lawyer. I'm going to touch on certain things like mortgages. I'm going to touch on some things like insurance and taxes, and some things that lawyers are better equipped to talk to you about. If a question comes up about a mortgage situation, I will defer in most cases to a mortgage expert, because I'm here to help with real estate and I'm here to help you buy a home. All these things go together in the grand scheme of purchasing a home, but I don't want to give you the wrong information and I don't want to get anybody in trouble. So at the very least, I will recommend you to somebody who will answer those questions for you. Next disclaimer is real estate is constantly changing. Technology, the way it is now, is so much different than technology 5 years ago, 10 years ago, whatever. So an answer that I give you to a question today or something in my presentation today may not be accurate 3 months from now. That's why it's always really important to have a professional alongside you to help you out through these transactions, through these situations. And like I said, if you ever have any questions, feel free to reach out. I'm always happy to answer them. Next one is that real estate is different everywhere. Like I said earlier, I'm licensed in Maryland and Virginia to do real estate, to sell homes, help people buy homes. My office is licensed in Maryland, Pennsylvania, DC, Virginia, West Virginia, and Delaware. But there's huge differences from state to state. A contract for a home purchase in Maryland can be 60-ish pages, roughly, whereas one in Virginia is 25-ish. There are huge differences in laws from state to state, and what I'm going to share with you today is kind of a broad set of information that will help everybody everywhere. As far as like really specific situations for if you want to buy a home in California versus Maryland, give me a call, we can talk, and like I said, I can either help you find somebody who's specific to your area who will take care of you, or if it's a question around here, I can obviously answer that for you. And last but not least, this isn't everything. It's not even close. I've got roughly 10 points I want to talk about today, and they're just a starting point. There's so much more to buying a home than what's here, but this is a great place to get started when you're really, really, on the starting line of purchasing a home. You want to get out and start looking. There's a lot more that needs to be talked about and discussed and taught and learned about. But for right now, this is a great place to start. So let's jump right in. Owning versus renting. Obviously, if you're here listening to this webinar, watching this presentation, you have an idea that you are thinking about owning your own home. Probably a lot of you are renting right now, or either living with a family member, a friend, whatever. But I've noticed that a lot of my clients are first-time home buyers. I'm 27 years old, so a lot of my clients fall into that 25 to 35 category just because of the people that I know. And I get an awesome opportunity to help a lot of those people buy their first homes. But something I've noticed recently is a lot of my friends and a lot of my clients have said, it's time for me to buy a house. All my friends are buying houses. I see on Facebook every day one of my friends is buying a home. They're buying their first home. I feel like I'm behind. Um, and I kind of want to set some of those fears at ease. This slide is pretty cool. This is a breakdown of home buyers. And the top part is what I really want you to pay attention to here. 100% of first-time home buyers. The median age, so basically the average age, is 32. So if you're in your 20s right now thinking, I'm so far behind, I don't own a home, all my friends are buying homes, you're not behind at all. Actually, your friends are just way ahead of the curve. But the thing that I really want you to take away from this is buying a home is one of the most personal choices you can ever make. It's the place you're going to go back to after work and relax. It's a good place you're going to hang out with your friends. It's a place that you could potentially start a family in, whatever it is. It's it's your comfort zone. You're buying your new comfort zone, and that has to come when you're ready. I recently helped a 67-year-old woman buy her first home. She had rented her entire life, and at 67, she decided it was time to buy her first home. It's super personal, and it's totally up to you. So don't ever feel like you have to because other people are. And that goes for everything, but specifically in home buying. US homeownership rates, you can kind of see in this slide here, the far right is where we are in the past few years. And overall, homeownership rates are increasing. Part of that is because you can see there was a steady decline for some years, and that was kind of the real estate crash, and people had to sell off their homes and go back to renting for a while. But it's starting to pick up again as far as home ownership. And a lot of that is also because people were weary of buying a home for a little while because of the crash. But now with the mortgage industry being more regulated and it's more strict on who can loan money, how the process is handled, and there are a lot more safeguards in place. All the lending that's happening now is much more strict, and people are much more confident about purchasing the home. So you can see that this is something that people are definitely on board with again, which is awesome to see. This is probably the most powerful slide that I'm going to show you today, in my opinion. This is the cost of renting versus the cost of buying. Now, historically, that top section there circled in the red, this is going to tell you the percentage of income needed to afford a median rent. Now, that's across the country, so it's kind of broad, but it gives you a good idea what we're looking at here in the US. So the way to think of this is your paycheck that you're bringing home, historically, you needed 25.8% of that to go toward rent. Right now, we're actually a little higher than that. We're looking at 27.7% of your paycheck is needed to go toward median rent across the country. So if we look at that section in the blue, this is percentage of income needed to go toward purchasing a median home. So that's going to be a mortgage payment. Now, it's always been historically cheaper to buy a home than it is to rent if we look at those numbers right there. It's about 4% cheaper to own a home and pay a mortgage payment than it is to pay a rent payment. But right now, it's about 10% less, which is crazy to me. If you think you could have 10% more of your paycheck every month and you're going to own a home, that kind of says it all right there to me. I think that's the most powerful thing we're going to look at today. Not to, put it all up front like that, because there's a lot of really good stuff coming up. But that, if you needed something to push you over the edge into should I be buying versus renting, or should I be thinking about or planning to purchase a home over the next months or years, I think that slide right there is what you probably needed to see. So right here, this is a slide from CoreLogic. CoreLogic is one of the most well-respected real estate statistics companies in the industry. They do some other things too beyond real estate, but when real estate agents and realtors want to go look at statistics for housing in the US, they typically go to CoreLogic. A lot of the slides you're going to see throughout the rest of this presentation that I have come from CoreLogic. Now this one, caveat here, there's an asterisk. They are assuming a few things here as far as, it's a fixed rate 30-year mortgage and there's a 20% down payment here. But this is giving you an idea of what the average or typical mortgage payment is for a homeowner from March 2018, March 2019, a few other months there. What I really want you to focus on is the 4 columns on the right, that March 2018 through the March 2020 projection. And just take those numbers and compare those numbers to what your rent payment is right now. My guess is these are probably lower. Now, there are some other things that go into a mortgage payment that are going to affect these numbers. Like it says, it does not include taxes or insurance. But compared to what a lot of people are paying in rent right now, I think this is going to definitely make a few people think out there. So beyond just the actual money situation and the monthly output of money, why is buying a home so key? And the password is equity. So what exactly is equity? It's one of those things we hear about all the time. We have equity in our home. We have equity in our home. Oh, I've got so much equity in my home. Equity is basically just the value of the home that's appreciated over time that you didn't pay for, but now the home is worth more money than you paid. Effectively free money. David Bach is an author. He's written at least 10 books about finance and personal wealth and generating wealth. And these 2 quotes I think are really interesting by him. One is that not prioritizing home ownership is the single biggest mistake millennials are making. He's saying that people in a certain age bracket aren't paying enough attention to purchasing homes. They're not prioritizing that enough. And one of his comments that he said also is that buying a home is an escalator to wealth. If you could think of any other investment, like in the stock market, when you purchase it at a certain price and it becomes worth more money over time without you having to do anything to it, that's an escalator to wealth. And that's what he's talking about here with purchasing a home and owning a home. So typically the question I get a lot of times with equity is, well, how much can I expect? What is it really going to do for me? And again, this is another statistic infographic from CoreLogic, and this is broken up across the country in regions. Basically, what you can expect from appreciation. It says home prices, but home prices really are just the appreciation of the value of the home or what people are going to be willing to pay for the home. So, just to pick the South Atlantic region, because that's where Maryland is, 5.48%. That's how much homes are up. So the value or the sales price of a home in this region is up about 5.5%. That means that 5.5% is how much more your home is worth, how much equity you have in the home. Now, I don't particularly, just being honest with you guys, I don't love the way that this map is broken up because I think there's a huge difference between the market in Florida and the market in Maryland. And I think the appreciation levels vary greatly. So obviously these numbers are averaged by those states. And if you want to have a conversation about certain states and what their appreciation level is versus others, that's something I'd be glad to talk to you about. Like I said, anytime you have a question, feel free to give me a call. And then again, according to CoreLogic, this is from a homeowner equity insight study that they did. This quote, in the first quarter of 2019, the average homeowner gained approximately $6,400 in equity during the past year. It's worded in not a great way, in my opinion. I would have said, as of the first quarter of 2019, it's been shown that over the past year, the average homeowner gained $6,400 in equity. But just think about that, $6,400 over a year for nothing. You didn't do anything. All you did was own your home. You made your payments. You lived in a house. You enjoyed having a space of your own, and you're worth $6,500 more than you were before. It's pretty cool, and one of the really neat things that I love about real estate. So next topic that I want to talk about is interest rates, and they matter a lot. So what is an interest rate? We hear about those things all the time also, but the important thing to know about interest rates is basically that's what a bank or a mortgage company or a lender, any type of lending institution, that's what they are charging you to use their money. So you're effectively buying money from them to purchase a home. So interest rates matter a lot. And people talk about interest rates all the time. You hear about them on the news, the interest rates going up, interest rates going down. They change all the time. They fluctuate a lot, kind of like a roller coaster. Um, but what I don't see very often is people talking about what's a real world application for a change in interest rates. So I have one for you. Now these numbers, these are projections from 2018. These numbers are not accurate in that the interest rates, the 4.02 and the 4.8, that's not what the interest rate is today, and that is not what we're now projecting for next year. But these numbers give us a good basis just to go off of for the effects of change in mortgage rates. So you can see in the left column at 4.02% on a $250,000 home, the mortgage payment per month with the principal and interest accounted for, $1196.42. If we change that interest rate to 4.8 and we deal with the appreciation, so that's the home price change there, we now see a mortgage payment of $1,375.93. That's a pretty big difference. Actually, it's $179.51 a month. Think of what you could do with $179.51 a month, or annually a little over $2,000, or over 30 years, which is a typical mortgage loan length, $64,624. And I know this because I tried it out earlier. That is a pretty well-equipped Mercedes E-Class. And that's the difference in just waiting a year as far as interest rate changes and appreciation. So you can see that interest rates really do affect your monthly rates, your mortgage payments, and over the long term, how much you're effectively paying for your home. So this leads us to the question of where are mortgage rates now? Where are they headed? Where are interest rates going? This is Freddie Mac. They're one of the big lenders within the country. 30-year fixed rates, which is your typical mortgage rate. They're projecting that over 2019, the final two quarters, quarter three, quarter four, and the first two quarters of 2020, they're going to be pretty steady at around 3.9. That is what we in the real estate industry and in the mortgage industry, they call really cheap money. You know, yeah, it was at 1.8 or 2, you know, a year or so ago, but in the grand scheme, 3.9 is crazy cheap. Ask your family members when you get a chance that have maybe owned a home for a few years, or ask some of your older family members what their interest rate was when they first bought a home. I know in the 80s, there was a point where interest rates were at 18%. That is unbelievable compared to what we have right now. So it's an amazing time to buy, and it's going to stay an amazing time to buy for a little while. Now, who knows for sure what mortgage rates are going to do over the next few years? Nobody. Like I said, they fluctuate. There's always something that pops up, you know, on the global spectrum in the US economy. Something will happen and interest rates will change. They're very much affected by the government, by the economy, economic numbers, economic reports come out, and interest rates change. But for right now, we're seeing it's pretty stable and overall really cheap money. Credit scores. We all hear credit scores are important, but only kinda. It is time for a quiz. I've got a few quizzes throughout the day. So here is one about credit scores.
All right, so everyone should now see a poll up on their screen. The question is, you need a 750 or above credit score to purchase a home, true or false? So we'll give folks a couple of seconds to respond. All right, get that last vote in. We'll go ahead and close out the poll. We have 20% of our audience voted true and 80% voted false.
Awesome. So thank you all for doing that. Like I said, I've got 2 more quizzes coming up, these little polls. So the answer is false. Actually, roughly half of all home purchases that happen, the credit scores of the purchaser falls below 750. So you can see that while there is, 35% is that 750 to 799, 49.53% of people who purchase homes have below a 750 credit score. Now, a lot of you seem to know that, which is awesome, but a lot of people actually don't realize that, and they think that they have to have, a 750 or an 800 plus credit score. Now, I will say that roughly at the 720 mark and above, you'll get some slightly better interest rates on certain loans, and you'll have some lower fees for certain things. But please don't ever think that homeownership is out of reach because you have a lower credit score. I help a lot of people who have lower credit scores. They sometimes go through a little bit of credit counseling or something like that and can quickly raise their credit score, or it's just a matter of finding the right program for them and the right lender to help them along the way. Again, the average credit score here, it's broken up a little bit by types of loans. You can see the average for all loans is 731, but then when you get with the FHA, it goes down to 675. So like I said, there's always options. There's always a reason to at least start a conversation. And I don't want people to think that they can't begin the process and they can't have that initial conversation about purchasing a home because they have what they feel is too low of a credit score. That kind of leads us into down payments. Down payments is money that you have now that you're going to put toward the purchase of the home that's not part of the mortgage. That's all it is. It's just money that you're putting toward the purchase of the home that isn't part of the mortgage. It's money that you have saved up over time. It's money that you received as a gift that you want to use toward the home. We actually have another quiz here, another little poll.
Our next quiz should be up on your screen now. The average down payment for a first-time home buyer is either 6%, 10%, 15.7%, or 20%. We'll give folks another couple of seconds to put in their vote. All right, great. So our results there were 20% of our attendees voted for a 6% option. The most popular choice with 40% was the 10% down payment. 20% voted for 15.7 and 20% voted for 20%.
Awesome. Thank you guys so much. Thanks, Colleen, for running that. This is one of my favorite questions to ask people who are first thinking about purchasing a home. And the answer to this question is actually 6%. That is what most people put down on their first, put as a down payment on their first home. And why I love to ask that question, why I love to have that poll there, is because of this graphic right here. That big column at the bottom, 40% have no idea what's required for a down payment. So just to be able to help people answer that question is awesome for me. But the other interesting thing here is that second column with the arrow next to it, 17% of people actually got the right answer on this question. Most buyers only need between 1% and 5% of the purchase price to buy a home. That's pretty crazy because we've probably been told through our parents, I know at least I was when I was in college and said, I want to buy a house when I get out of college. They said, well, have fun saving 20% for your down payment. 20% is not necessary for a down payment. As we can see here, 1% to 5% is really all you need. Now, the more you put down, the less you have to pay over time, obviously, and the less you're going to have financed, and the less you will be paying interest on. But it's so much more attainable than a lot of people think. And so we see here, first-time home buyers, like I said, 6% is the down payment that they typically put. For all purchasers, it's 10%. Repeat purchasers, so these are people that this is not their first time buying a home, they on average put down 14%. Now, why do they put down 14%? Because they probably just sold a home and have those proceeds, but a lot of the money they're putting down is equity from that home too. So you can see how buying that first home, building that equity rolls along and along and along to every other home that you build or that you purchase. Few more down payment extras here. A third of first-time buyers got down payment assistance from family. A lot of people don't realize that you can get down payment gifts from family. It has to be documented, but it's a super easy process. Basically, they give you a check for however much they want to give you, depending on how much they like you. That's just a joke. But they give you a check, and all you have to do is just make sure that your mortgage company, your finance representative, gets a copy of that to see that the money came from your family member. So it doesn't have to be just money that you have saved. You can receive gifts and use those towards down payments. That's totally acceptable. Um, there are over 2,500 programs across the country to help with down payment assistance. Some are for members of the military. Some are for teachers. Some are for first responders. Some are for people living in certain neighborhoods. And a lot of them are for first-time home buyers because the government actually understands that saving money can be difficult. And a key to getting those programs and getting the most out of the programs that are available to you are working with people, working with lenders that have local knowledge and understand all of the options available to you, but that also understand the broad scope of the programs that are available nationally as well. And we'll talk a little bit later about choosing a lender and things to look at there. And the third thing here, in most states, a 3% down payment, which is what a lot of people are starting to use now, is achievable in less than a year of saving. So with that in mind, if you have nothing in the bank right now and you want to start saving money for a down payment for a home, in most states, you're less than a year away. And that's really, really cool to me. So moving into our next topic, you're thinking about starting saving for a home and you want to figure out what the first real step is. It's getting a pre-approved first. And a pre-approval is just speaking with a lender, speaking with a representative from a mortgage company or a bank, and basically they tell you, yes, we are going to agree to give you a specific amount of money to buy a home. Now, the steps that takes is you have to find out your credit score and your credit history, and they're going to do that for you, that representative. You need to provide some documentation to them, W-2s, tax returns, employment verification, just to show that you have income and that you can afford to pay your mortgage payments. It says contact a professional third. That's going to be kind of along that first and second step. You're going to be talking to somebody. And then the lender is going to review income, expenses, and your financial goals. You're going to talk about the big picture, not just can I afford this house or not. A good lender will talk to you about what's a really good place for your mortgage payment to be so that you're not, house poor, so that you can afford to do things like eat. I'm a big fan of eating. And then finally, you're going to apply for the mortgage and get a pre-approval letter. A pre-approval letter will accompany your offer on a home, and all it says is this person has been pre-approved to be able to afford this home, and we are backing them to be able to buy this home. And people who are selling their house, they want to see that you've gone through the steps to do that because they want to make sure that you are obviously serious and that you are qualified to be buying the house. So some of the reasons to start with a pre-approval, number one is to set expectations. Too many times I've seen people who push off the pre-approval and they start looking at houses in, say, a $400,000 to $500,000 price range, and they fall in love with the perfect home, and then they do the pre-approval and they find out that they can only afford a $300,000 home, and they're totally crestfallen, and the whole experience has just been terrible for them now. I tell people to start with this because you can really set the expectations, figure out what you can afford, and figure out your exact situation. When you're going through the income verification, you're going through the credit checks, you're going to know exactly what your credit scores are. A lot of people don't know what their credit scores are. It's a lot easier now to know what they are than it was, 20 years ago with, free credit report. And I'm pretty sure everybody's credit card company prints the little thing on the statement saying what your FICO score is or whatever. But mortgage companies actually look at a slightly different score than what we typically get access to. They're going to look at your mortgage credit score, and it varies from what we typically see on your free credit reports or on your credit card reports. And doing the pre-approval process first, you're going to know where you are in their eyes, and if there's anything you need to fix or change, or anything you can improve along the way to put yourself in a better position. Next is to take advantage of programs available to you. Like I was talking about earlier, over 2,500 programs available just for down payment assistance. There's also programs to help you get better interest rates. There's programs that will help you get an interest rate for a period of time that you would never have been able to get for, otherwise, and then it goes back to a regular interest rate later on. There's a ton of different options out there you can tailor to your situation and tailor to, I know I'm getting a raise 6 months from now and I'll be able to afford more. So maybe interest rates will fluctuate and improve your situation over time in a certain program. So get to know that now, get to talk to your financial person now, and they'll help you out now to set the plan, because the plan is really going to put you in the best position over time instead of just kind of hoping for the best and not knowing exactly where you're going, not having that end goal in mind. So an important thing that I think people need to know about the home buying process is it doesn't just happen overnight. And we're going to talk about HGTV in a little bit, but this can be a really long process. When you think about the pre-approval process and you think about potentially needing to save money, from the time you first think about buying a home, if you don't have any money saved for the down payment, to the time you actually purchase a home, it can take months to a year or so to do, as we saw with the, roughly a year or whatever to save the 3% for the down payment. It doesn't have to take that long. It can be a really quick process. I've seen people go from calling me to say, hey, I want to buy a house, to closing on that house in 20 days, so in the same month. But it doesn't happen overnight like we see on TV a lot. This graphic here is for average days to close a loan. And what that means is from the day that the pre-approval letter with the offer was sent along to a listing agent with the seller of the home, and the seller of the home said, yep, we're going to take that offer, to the time that the papers were signed and the keys were handed over, you can see roughly it's in that 43 to 49 days. So a month and a half is on average how long it takes to close a loan. And that's the longest part of the whole process. Once you've gone under contract, is just closing the loan. The mortgage company wants to make sure that all their ducks in a row are in a row. They're going to check your credit score like 3 different times. They're going to make sure you haven't taken out any credit cards along the way or purchased a boat or anything of that nature. But just keep in mind that, you have to be looking down the line a little bit here. Don't expect to go out, find the perfect house, and be living there next week. And part of that too is also because of what we call inventory of homes for sale. So basically the inventory of homes for sale is a number that we compare to the months. So where that column in the middle for January, 3.9, means that there were 3.9 months of inventory in the month of January. What that means is if all the buyers who are attempting to purchase a house right now purchased homes, it would take them 3.9 months for all the homes to be gone. It's a little confusing, and it's kind of a realtor or real estate agent speak thing that we use to determine if it's a seller's market or a buyer's market. But 6 months is what we typically say is an even equilibrium market, which rarely ever happens. Right now, because we are less than 6 months, it's a seller's market. Sellers have a little bit more control. They're getting a little bit more money for their homes, and there are a lot fewer homes on the market. It's harder to find that perfect house. People are looking at more homes than ever before they actually pick a house. And that's something we're actually going to talk about too in this next section. HGTV is just entertainment. And we're going to roll into our last quiz here.
So here's our final quiz question. HGTV shows are an accurate depiction of the home buying process. Give folks a couple of seconds to select an option. Great. Obviously, this one is an all of the above choice there. So everyone got it right on this one.
Yeah, that was probably one of the easier ones. I was really hoping for more. It's a no from me, dog, but that's cool. So yeah, HGTV, is this real life? Not at all. I'm sure a lot of you have probably seen this meme before. HGTV, I sharpen colored pencils and my wife works an hour a month collecting butterflies. Our budget is 1.8 million. HGTV is for entertainment. There are a ton of myths that pop up on HGTV shows that I want to dispel real quick. I'm going to actually target 3 of them specifically, but there are a ton of them. Myth number 1, buyers just look at 3 homes and decide to purchase one of them. That is so far from the truth in most cases. On average, you're going to look at about 10 houses before you find the right one. And that's a good thing. You want to see what's out there. You don't want to just decide that the first home you see is the home that you're going to live in for, on average, 5 to 7 years, statistically. You want to see some options. You want to get to know some different areas and learn, especially for your first home, what you like and what you don't like. And the only way to do that really is to go look at houses in person. Myth number 2, the houses the buyers are touring are still for sale. In almost every case on HGTV, when a homeowner has an option of purchasing house 1, 2, or 3, almost always they already own the home that they decide, and I do decide in air quotes, that they decide to buy. Because nobody on TV wants to see people not get the house of their dreams and not get the house that they want. But in actuality, in real life, people put in offers on homes and they don't get that house at the end of the day for whatever reason. Either they can't come to terms with the seller on price or other negotiables, or there's an inspection that finds that something's really wrong with the house and they decide to back out. The house that you put an offer on is not 100% the house you're going to buy. And I think that's important for people to know. And then third, the buyers haven't made a purchase decision yet. One of the really interesting things I see on HGTV is that they depict the home buying process as, let's talk to our real estate agent. Cool, we're going to buy a house. Let's go look at these houses. And they buy the house of their dreams. They don't ever show anything like the pre-approval process, like making sure they can afford the home. Yeah, they talk about their budget, but that's probably been so much conversation in the background about that that doesn't get showed. And I just think it's such an important piece to know that there's more than just deciding to buy a home. And they've, like it says here, they've probably already made a decision that they are going to buy the one. Love it or list it. I think most of the people have already purchased the new home already when they go on the show, for the ones who decide to list it and leave. So just keep in mind that HGTV, it's fun to watch. but it is there just for entertainment, and it's not an accurate depiction of what it's like to buy a home. This last section, and I think it's one of the most important, is interviewing the right people that are going to help you. Arguably, the mortgage agent and the real estate agent are going to be the two people you're going to speak with the most along the way of the transaction. Now, there's going to be a lot of other people. There's insurance companies, there's title companies, um, there's, your accountant should at least know that you're buying a home because there are some tax implications. But the two people you're going to be interacting with the most are going to be your mortgage officer and your real estate agent. For a mortgage officer, you want to pick someone with local market knowledge, someone that understands what's going on in the market around the home that you want to buy, knows what home prices are, knows what programs are available, and then also the general market knowledge of what's going on in the global scheme, knowing that maybe the Fed is announcing they're going to lower interest rates next week. I'm not saying that's going to happen, but if that were to be the case, and they knew that, they could say, hey, well, let's wait a week and you're going to get a better interest rate. Those types of things are super, super important to pay attention to. And just asking some questions about, hey, what's going on in our local market? What's going on in general in the market? And you can tell pretty quickly people who are up on their knowledge and who isn't. Ask them about programs that, like I said, the local programs, the national programs, but then programs that their company might have. I know there are some companies that give discounts to members of the military or give discounts to teachers, first responders, like I mentioned earlier. They sometimes give assistance to those people as well, some of the programs that the companies run themselves. And then finally, and I think this is really, really important, is availability. Ask them when they can reach you and when you can reach them. It's very, very important to be able to have that open two-way communication most of the day, because I found that some loan representatives, they work Monday through Friday, 9 to 5. And I'm sure they do a great job Monday through Friday, 9 to 5. But in my experience, I help people buy houses after 6 o'clock in the evening and on weekends. So you need somebody who's going to be able to help you on the weekends when you need something changed, or you need the pre-approval letter quickly, or you just have a question and you want an answer about a specific property and the numbers for that property. You're going to want to know that you can reach them when you have that question and not have to wait too long to get a response back, so that you don't miss out on the house of your dreams. Now, to the real estate agent column, the local market knowledge, the general market knowledge is also very important for them. But I talked earlier about there's a difference between a real estate agent and a realtor. A realtor is someone who has bought into the realtor set of ideals and actually belongs to a separate group. So all realtors are real estate agents. Not all real estate agents are realtors. In fact, about only half of all real estate agents are realtors. It's a designation that we have to, it's a group we have to pay into. We have to kind of put our money where our mouth is and say, yeah, we are going to put up this money to be held to a higher standard, basically. There's a long booklet of a long questionnaire booklet we have to go through to become a realtor. We have to agree basically to a higher ethical standard and a higher level of educational standards than just a real estate agent. And beyond that, the GRI, which I talked about a little bit earlier, that I recently received about a year ago, graduate of the Realtor Institute, that's a designation held by less than 7% of realtors, not just real estate agents, of realtors. And that the best way to think of that is getting your master's in real estate. It's above and beyond what a lot of people go through as far as education. It's lengthy classes, boring classes, to be honest. But a lot of classes, a lot of education, a lot of real world applications that you have to go through before you can be awarded this designation. It's something I am super, super proud of. But there are also other designations. There are ePro, which is for professionals who do a lot of their work electronically. There are designations for people who help with military buyers and sellers, people who help with senior buyers and sellers. There's a ton of designations, and it's really important when you're interviewing a real estate agent to ask if they're a realtor, to ask if they're a GRI, and to ask what other designations they have, because you can really see what's important to them through their designations and what they've chosen to spend time and money on. You want to make sure that they're with a reputable company. I think that goes without saying for anything. You kind of you get what you pay for in a sense. And then the local experience and knowledge is very important for a real estate agent because they need to know this neighborhood versus that neighborhood, which one appreciates more, what problems does this neighborhood have, what benefits does this neighborhood have. They need to know a lot about a lot of different places, and you can again pretty quickly find out if they know their stuff just by asking a few key questions. One of the things I like to say is ask them questions about the neighborhood you live in now to see how much they know about the neighborhood you live in now, and then versus how much they know about the neighborhood you want to live in the future. And that's how you can really get to know your real estate agent and get to know what they're really putting into everything. So that's kind of the bulk of what I have. We can kind of go into a question and answer time now.
Great. Thank you so much, David. We will go ahead and take some time for questions now. Just a reminder, if you do have questions, you can type them into the question box in the GoToWebinar control panel. We have a couple of questions that came in throughout the presentation, so we'll start with those. The first one is for interest rates, knowing that every situation's a little different, but assuming in general, all else equal, do you suggest working with a credit union or a bank for rate shopping?
Sure. So that's a really good question, and a question that I get a lot. As far as rate shopping, if you want me to make a very blanket statement, um, credit unions are typically very hard to beat. Now, the flip side of that, and like you said, every situation is different, and you want to think of other factors beyond just interest rates. Um, they typically fall into that 9 to 5, Monday through Friday column. Again, we're just making blanket statements here, which I don't always like to do. But if you really make a connection with a loan officer at a credit union, and they're somebody who goes above and beyond, they're going to be a great option for interest rates. Like I said, you have to look at the programs that the different companies, banks, credit unions, and mortgage companies specifically tend to have more programs just for that company itself that could help you out. So you have to look at those options as well, because a blanket interest rate from a credit union may not be as good as one of the special programs that a bank or a mortgage company could offer you. So always shop around, always get a couple of opinions. You're not going to be locked into anything. And yeah, so I hope that answers your question.
Great, thanks so much. Our next question is, if you have extra funds above and beyond the 20% to waive PMI, is it more advisable to buy down the rate with points or more towards the down payment?
Cool, great question. So that is a question that has a few parts to it. And honestly, that's one that I would typically defer to a mortgage representative, just because it's going to come down to your situation and your goals as well. So yeah, send me an email afterwards and we can talk about that a little more. Sorry, that's just a really difficult question for me to ask or for me to answer. Not being a mortgage professional, I don't want to give you the wrong answer. And like I said, it's really dependent on your situation and your goals long term.
Thank you. And as a reminder, we will be sharing David's contact information as well as a copy of this presentation for folks to refer back to if you do have more specific questions you'd like to follow up with. Looks like a last question here. In general, between big national banks and smaller local banks, which would you tend to recommend?
So if it were just me, well, this is a good example. This is actually a great question. I bought a house myself about a month ago. I chose a small local bank for several reasons. One, I felt that the mortgage representative that I was working with was really on my side. I felt a good connection with him, and he really went above and beyond to help me out along the way, and that personal touch was really important to me. Secondly, I felt they had a really good handle on the local market. They understood what was going on in this area, and they understood the best way to help me um, financially in this purchase and along the way in the future towards my future goals. Um, Also, being a smaller bank, it's easier to get from the bottom to the top. And what I mean by that is, if as a realtor, I have, and I work 100% on commission, so I have a different income situation than a lot of people do, and sometimes that can be an issue with proving income. And with a smaller company, a smaller lender, they there's fewer steps to get to the higher ups that can make a special waiver or can give you a special circumstance. Whereas the bigger companies, the national companies, sometimes you can get, lost in the shuffle. I don't want to, disparage anybody, but I've seen my clients, and that's all I can speak on. My clients have been much happier and have had a way better time along the way and have made much better personal connections with the smaller companies. Um, so I can't say what's going to be best for you in that regard, but uh, shop around, try both, and make the best decision for you.
Great, thank you so much. So we will go ahead and wrap up. If you didn't have a chance to have your question answered or you do have something more specific, again, we'll be sharing David's contact information. David, is there anything else you want to cover before we wrap up?
Yeah, just one last thing. Like you had said, if you ever need any more information, give me a call. The pictures on here now are from a first-time home buyer and a home buyer guidebook that I've put together that I update every quarter. If you'd like me to send you this, either a hard copy or PDF, shoot me an email, call or text. Here's all my info again. Thank you so much for the opportunity to talk to you guys. And if there's ever any questions, please don't hesitate to reach out.
Great. Well, thank you again, David. That was a really wonderful presentation. Everyone seems to have learned a lot. Thank you to everyone who joined us today. Have a wonderful rest of your day and go Terps.